I started with a smaller mom and pop because of the same reason everybody else starts with this or goes to a smaller shop. I said, hey, they're only going to take 10% and thought, oh, this is great. I'm only going to have to pay 10%. I didn't have the training and support needed to grow as an agent. The broker was great. I'm not saying anything bad about the broker at all. He just wasn't set up for that. He was an investor and had his broker's license because of that.
Yeah.
And he said, hey, if you want to grow, go somewhere where you can learn.
Yeah.
And I did, and it went really well.
If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randall. Let's dive in.
Hey, welcome back. Today I've got an awesome guest named Jordan Moorhead. He is the Moorhead Team, group of real estate agents in the Austin market that work with investors specifically, or not specifically, but they have the background experience to do. So we talk about his journey starting in real estate, how he started investing, how he bought his first property, transitioned into buying sixplexes, and then buying 39 houses in one market, and then also buying his most recent mobile home park, and then how he's grown his brokerage and what they're focused on and what they're working on now. So you're going to get a ton of that show. Jordan's an awesome guy. He's got a ton of information. He's up in the Austin market just north of us in San Antonio. So we had some commonalities there. If you're getting some of that show, please go on, rate and review wherever you are. Give us a star rating. Plus, if you drop a word or two in the comment section, that helps us out a ton with the reach of the show. Get us awesome guests just like Jordan. So let's jump into the show. Here we go.
I typically, if I'm not too busy, spend the end of the week on more of investing focused stuff.
Yeah.
So today I was pulling lots of owners' information, trying to build a good list for a caller we have working for us right now.
Nice. What are you targeting? Single family, multifamily, everything?
Right now we're targeting mobile home parks in the 30 to 80 lot range, either in Texas or the Midwest.
Mm-hmm.
Over 60% occupied, ideally city water and city sewer, but we'll look at septic tanks too. We bought a lot of single family over the last few years. I started with small multifamily and did that for a while. I still own 2 duplexes myself here in Austin, but I've sold off most of that at this point.
Yeah. Interesting. Let's dive into how you got started. You started investing first before you got your license. And so tell me the evolution, like what did you start buying first? And then what drew you to real estate in general for investing purposes?
So I guess I'll start off with what drew me to real estate in general, because that started well before I got into real estate investing. I guess is about as far back as I can remember. So high school, at least, I was interested in real estate investing. It's just the concept made sense to me. It's, hey, I didn't know much, but I knew that you could buy property and somebody else would live in it and pay for it. And there was other ways to make profit. I didn't understand anything about how you made profit. I didn't understand all the ways that you can make money with real estate investing, but I just fundamentally understood that it made sense. So I started investing when I was 27 by house hacking and real estate. I really started learning about it when I was about 24 and just didn't take action. I wasn't real sure where I wanted to be. I would have been able to a year or two before, but just not understanding where I wanted to be living slowed me down a lot. And I didn't realize at the time that it doesn't really matter where I lived, because I could have bought and then I could have moved and I could have bought in other areas, but I didn't understand much about it. So I first started house hacking when I was 27. For years up to that, I've been listening to all the Bigger Pockets podcasts, going to meetups, meeting people who are successful in real estate. And multifamily really just made sense to me. You know, the whole, well, 2 doors are better than one. And, you know, you're still you have a roof you have to replace. You might as well have 4 units under it, all that kind of stuff. Just the concepts made more sense to me with multifamily. And this was in 2015, 2016. Multifamily, of course, for the past decade or so has been really popular.
Yep.
And just as far as the scale goes, really popular. So I started with the duplex, house hacked that property. I lived in 1 unit. I rented out the other bedroom in that unit to a friend of mine who actually was a realtor that sold me the place. We had a deal where he was supposed to do my books. My guy had a small business. I was a personal trainer, and I had other trainers that worked for me and admin staff. He was supposed to do my books. He was a good buddy. I didn't really hold him accountable to that. I guess I probably knew it wasn't going to happen when we came up with the arrangement. So I gave him a discount to live in this room. So I was making $450 off his room. And then I had a big, in quotes, back porch that I saw it. I said, I'm not going to use this for anything. It looks like a full bed would fit here. So I rented that on an Airbnb. Between the upper unit, the bedroom that he was renting for 450, and the Airbnb unit, which was renting for somewhere in the $500 to $600 a month range, because we were mostly monthly stays. It was a small room. It was mostly like students, people traveling for work, didn't have a lot of money, that kind of stuff.
Yeah.
I made about $500 a month to live in that property. So I was making $500 a month after I paid the mortgage, all the expenses. It was great. I had really taken saving seriously around this time. I barely had enough money to get in that first house hack. I had to cash out most of an IRA to get into that first house hack, and most of an IRA was like $4,000. I didn't have any money at this time. I had no money. I had $3,000 or so in my bank account. I had five or six in an IRA, cashed out four, came up with the down payment, which was almost $7,000, and got the seller to cover all the closing costs, and then borrowed money from my dad to redo the carpet and the paint of our unit before we moved in because it was not livable. There were people living in it, but it was trashed. So I got into it by the hair of my teeth. I did not have any money whatsoever. Really took saving seriously and continued to grow my business. And this is a really similar theme to what's happening right now. I continued to grow my personal training business at the time, made a bunch of money, socked it away. Within 6 months, I was able to buy my first sixplex property. I was able to do this because I found a seller in Louisville, Kentucky, where my dad's a realtor still, where he would allow me to do 15% down owner financing, which was like 55 grand or something.
Yep.
So I saved a considerable amount of money in 6 months. I was saving like 80% of what I made. Again, got in by the skin of my teeth. It was not the best investment, but just continuing to move my portfolio or grow my portfolio was one of the best things I've ever done. I don't know that my portfolio today would look like it does if I had not just continued to grow that quickly. So 6 months in, I had 2 properties, 8 units. Another 6 months later, because I had all this extra money and was living for free, I went overseas. I went to Italy. I had a great time in Italy. I got a real estate license mostly while I was in Italy because I was traveling alone, just had some extra time. I bought a motorcycle, more on that later. Like I just had all these options. No, not in Italy.
Yeah, okay.
I bought a Ducati. So it has something to do with Italy, but
exactly.
Bought my first house hack 6 months in, bought a sixplex. A couple months later, went to Italy, got a real estate license by September the following year. So it was about 10 months later, I got a real estate license after closing on that first duplex.
Yeah.
And I got my real estate license not only because I thought that it would be something that would be fun to do and probably make some money doing it. Obviously, I'd seen my dad do well in it, but also because I saw that there was kind of at the time, and I believe there still is, a space in the market that was not being well served. And specifically, that was newer investors or house hackers. These people that are trying to get started, they're very reticent to make these decisions and these moves. And a lot of the agents that were out there that I interviewed before I landed on a buddy that had a real estate license part-time, they were just really trying to sell. They were really pushing hard. The market had been heating up pretty good at this time, 2016. It just didn't feel good to me. And I was like, man, there's got to be a better way. I understand this stuff. I'm house hacking. I'm investing in real estate. Why not me? So I got started. My first full year in real estate sales, I sold 24 houses. Most of those were duplexes. And I was rookie of the year in our brokerage at that time.
Yeah. Is that Keller Williams? You still with him?
Yeah, I actually didn't start with Keller Williams. I started with a smaller mom and pop because of the same reason everybody else starts with this or goes to a smaller shop. I said, hey, they're only going to take 10%, and thought, oh, this is great. I'm only going to have to pay 10%. I didn't have the training and support needed to grow as an agent. The broker was great. I'm not saying anything bad about the broker at all. He just wasn't set up for that. He was an investor and had his broker's license because of that.
Yeah.
And he said, hey, if you want to grow, go somewhere where you can learn. Yeah. And I did, and it went really well.
That's funny. I've had that conversation. I'm a broker, and so I've had that conversation with a lot of agents when they're like, oh, I want to learn, I want to do this. And so, like, if you want training on the broker side of the business, go to Keller Williams. Like, they have such a great training program. They like put people through the ringer. And so that's funny. Yeah. Same advice from another guy. Very similar situation. So let me ask, where was that first house hack? Was that in Austin?
Actually, no, actually in
Okay.
Minneapolis, Minnesota. So I
Okay.
was in Austin until May of 2016. I had been living in Minneapolis for the 8 years or so before that. And I had a business that was technically still operational in Minneapolis. I had lived there through most of 2015. So I had filed taxes in Minnesota in 2015. And I was still making some income in 2016. So the choice was stay in Austin. I was self-employed. It was going to take me 2 years or so to get back into the space where I could be a real estate investor. And I was kind of running low on money at the time too, because I came here knowing nobody in 2016. Or go back to Minnesota, essentially flip a switch and start making good income again, because all my clients were still there kind of ready to go, and start investing in real estate right away. So it wasn't necessarily what I wanted to do, but it was just a smart option for me at the time. Again, I had multiple years of tax returns to be able to prove income as a self-employed person. I went back and I started shopping for real estate almost right away
Yeah.
and was able to get pre-approved and everything.
Yeah. That's awesome. That's a very cool story. You got in, you got the deal. So you made $6,000 in income that year on top of being paid, like
Yeah.
your mortgage getting paid, tax and insurance getting paid. So you made 6 grand and you had seven or something, or you said you had 3,000 plus an IRA. You
Yeah.
doubled you doubled your bank account balance. So
Just
that's
off the
awesome.
cash flow, which the appreciation of the property was amazing too. So we
Yeah.
could touch more on that if you'd like to.
Yeah, I mean, it's one of those. The reason I was thinking you were in Austin, my buddy did the exact same thing, and you're like, I
Mhm.
could have invested, I could have started here and just bought and then moved. I mean, that's what he did. He had the foresight. He bought a place in New Orleans when he lived there. He's working, and then he moved to Austin. He bought a place on the east side, and
Mhm.
like the appreciation alone on that thing when he bought it, it's insane. But he house hacked that, and then he went to New York,
Yeah,
and now he's doing the same thing up there. So
that's
yeah,
awesome.
I don't know the market in Minneapolis, so I don't know what kind of appreciation. Do you still own that?
I don't. So I sold that before I left Minneapolis. So I bought it in December of 2016 for $187,000, which was pretty cheap for a duplex at the time. It was a bad listing. It was hard to show, and it had been sitting for a while. So he got to the point where he really wanted to sell it. I think it was listed at 215, and I actually got it for 187, which was a good deal at the
Yeah,
time. Immediately it was worth like 235 after just some small fixes, 235, 240. By 2018, it was worth $327,000. And that was, I lucked out. So I moved in, I remodeled the bottom unit with my own cash. Like I said, I borrowed $3,000 to do the carpet and paint right away. Over the next year or so, I saved up enough money to remodel the kitchen and bathroom.
hmm
The contractor ended up going to prison while we were remodeling. So it took a lot longer than it was supposed to, but
been
it
there.
got done. It
Yeah,
got done. And I ended up selling it in May of 2018 when I was kind of getting in the mood to come back to Austin for
yeah.
$327,000. I left out a part. I woke up one morning to hail hitting the side of the house. And I said, this is my lucky day. It had old aluminum siding that was in bad shape.
Well,
The entire aluminum siding got replaced, all the soffits and fascia and all that for a $500 deductible. So I really lucked out
yeah,
on that one.
nice. Well, very cool deal. So you had that, you bought some time essentially. You got to go to travel to Italy and do that,
Mhm.
get your license at the same time. So what was the transition like? And what are you now? 50-50 brokerage to investing? Is there even a number that you can put to that? Or is it you're just building out your team and you buy deals as they come up? Or what does that look like now?
Yeah, that's a good question. So somehow or another, I've never lived in a market where I've done a lot of investing in. So when I was in Minneapolis, I bought the one duplex there. I didn't do any other investing in Minneapolis, St. Paul. There's a lot of other reasons, but I knew I wasn't going to stay there. So I just wasn't keen on investing there. I started investing in Louisville, Kentucky, where I'm from. While I was living in Minneapolis, I still invest a lot in Louisville. Once I moved to Austin, I was doing the house hack every year or so. And, that takes up a little bit of time, but not a ton. I've always invested other places. I've always used agents or brokers other places to do it. I've always had property managers when I'm doing that too. So really, in all honesty, the time split is heavily favored on the real estate brokerage side. I would say even now, it's more of like an 80-20.
Yeah.
And my team really gets the bulk of my attention. I'm not ever doing something investing related, and I won't drop everything to go help the team or help deal with one of the properties we have listed, that kind of stuff.
Yeah.
But I've arranged it in that way that it can work. And now all of the investing I do involves partners. That's helped that a lot. So in Louisville, between 2020, December of 2020, and now I have a business partner in Louisville who I actually went to high school with. We bought something like 38, 39 houses. We have 34 right now. We've sold a few that we did burrs on. We did the burr strategy with. And then we have a mobile home park, 30 lots, and has a house on it in Louisville too.
Yeah. Let me ask you about the brokers then. Again, we've got a bunch of agents listening to the show. The whole idea, right, is what kind of strategies are you seeing right now? You're in the Austin market. So one, I'm curious about the market, how Austin's faring right now. And then two, like what strategies are you using on the brokerage front that's winning you more business, that is helping your buyers and sellers, stuff like that. So we can touch on those two topics. So one, right now, can you kind of give me a backdrop on the Austin market? Like what's happening with pricing, rents, that sort of thing?
Absolutely. And if you read the media, they're months, if not half a year behind. So any media, any article you see, just think that they got this information. It's probably 6 months old. Somebody sent me an article this morning and it said Austin real estate market decimated, all this crap. The headline, of course, was really clickbait. They didn't understand the information they had interpreted, and what they had understood essentially was the Austin market pricing is in free fall and things are going down. They're not wrong about a lot of what they say, but they're typically very behind, like I said. So from May of 2022 till about the end of 2023, we saw prices fall in Austin. And they fell for the same reason they've had trouble everywhere else. Interest rates were really high and it continued to go higher, and demand went down. So Austin is a heavy tech city. A lot of people got laid off. There weren't as many people moving to Austin. Interestingly enough, in the Austin metro, Hayes County and Williamson County, so Williamson is north, Hayes is south, are growing like crazy. Travis County, where Austin is, pretty stagnant, but it's not such a binary 1 and 0 type of deal. So yes, Austin, the prices fell from May 2022 until the end of 2023. And now they're even slightly up year over year for January versus last year, or February versus last year. So we're starting to see things trend back in the right direction. The best time you could have bought a house here in Austin, of course, was always yesterday. In this case, it was October, November, December of 2023. That's gone. That's not happening anymore. But you can still get some good deals from sellers. There still are people that are in a position where they need to sell, and you always have to find the people that need and not want. So there are still some people that need to sell. We actually work with the biggest flipper in Austin. He's one of our clients, and he does almost all of his deals come from his own marketing. So he's out there doing his own marketing. He's getting deals. He does buy off the MLS still. So good deals can be had off the MLS. You just have to move quickly and give a seller what they want. So really, we're seeing people are still getting good deals on houses. Prices are down 15 to 20% from the peak. I don't see them going back down unless we see rates go up again. If rates get back in the 8-9% range,
Yeah.
all bets are off, really. Like who knows what happens then. I think we're going to see rates stay where they are for the next couple months. And towards the end of the year, I think we'll start to see a little bit of relief there. But what we saw is second half of January, rates came down into the sixes and people went nuts.
Yeah.
So we got multiple offers on a bunch of listings at that time. We had a bunch of stuff go under contract. I had an agent that had about double under contract what he normally has. At that time, what you really have to do on the brokerage side is you just have to stay in touch with people right now, because they're all waiting to see what everybody else is going to do. And it's just, we're kind of a herd animal. And I'm not saying that to be derogatory in any way, but we feel comfortable when we see other people doing something. So when other people are buying houses, we think, oh, we should go buy houses. And it's so much buyer sentiment right now. So on the brokerage side, I'm telling my guys, hey, stay in touch. Let's have events. Let's have more meetups. Let's make sure we're in front of our people all the time. Make sure we're doing amazing sphere care, client care, that kind of stuff. And then when people are ready, as long as you're communicating with them, they're going to jump in. I think there's going to be a time in the next 6 to 12 months where that pent up demand kind of releases because rates get down into the sixes.
Yeah. And I would tend to agree with you on that. Fed met yesterday. They didn't drop, but they've
Yeah.
signaled three coming up. So
Yeah.
I would agree with that. And when they did drop, I mean, it was very similar to San Antonio. We're not too far away. It was just like, okay, rates are down, buy, buy, buy. All that pent up
Mhm.
demand was there. So people started buying stuff. So, okay. So on the broker side of the business, what does it look like now? You have a team. Are you a broker? Are you an agent with a team? Like, how are you structured and how many people do you have and what does that look like?
So I still do broker a little bit of real estate in Minnesota, not a lot, maybe 10 to 15 a year. I'm a broker in Minnesota. I'm a licensed sales agent in Texas. As you know, broker's license in Texas is no short order.
Yeah.
It's 900 hours of education. I have the time that you need to
Mm,
be licensed. I have that under my belt, but I'm not continuing yet every night to try to get to that
yeah.
900 hours. It just doesn't matter for me.
Yeah.
So in Texas, yes, I'm a real estate agent with a team of agents that work for me. I have myself, two admin, and then I have three other agents that work for me. I don't specify what they do. I don't try to control what they do. They do listings, they do buyers. Of course, they're younger, they're newer. The majority of their deals are buyers.
Yeah. Yeah. Awesome. Yeah. It doesn't matter. It's funny because when I got my license, it was 2012, I want to say. I was an agent before that, obviously, but they were about to change the rules in Texas for the
Mhm.
new, like how you have to have that many hours and all this other things. And so I didn't have to do anything. It was like I already had the education, I already had everything there. And so I just went and literally applied and it was like, boom, okay, you rubber stamped it, got your broker license.
Yeah.
And now it's like, yeah, it's a pain. So I understand why you wouldn't do that. But anyway, okay, so let's talk more on that's the broker side of the business. I would
Mhm.
imagine that is helping. Are you buying anything in Austin now? Are you looking at deals as they come up, or is it more like I'm going to buy outside? I'm buying RV parks you mentioned, so we can talk more about that. But are you looking to buy in Austin specifically?
So yeah, we're buying mobile home parks. Absolutely, we would buy in Austin if the numbers work. There's not a ton of them in Austin, and the people that own them are pretty savvy and they know what they've got. A lot of times, mobile home parks in Austin, the land is worth more than the park is.
Yeah.
So and they know that. I've talked to a couple people who sold them. So not against buying in Austin at all. I'm trying to stay very focused anymore. So I went through a few years of just looking at deals and not being so specific in what I was looking at. And I would say, oh, I'll buy whatever is a good deal. And I didn't buy a lot during that time. But then when I got to 2020, so I would buy a duplex every year for a house hack or whatever else. I bought a couple sixplexes. 2020, a partner and I started buying houses in Louisville, and we identified 3 zip codes we wanted to buy in. We got really specific on what we would buy: 3 bedroom, 1 bath or greater houses on a slab foundation. And we got really specific on the numbers we would buy in. So at the time, we would say, hey, the most we can pay is 110 or 120 for these houses, depending on how big they are.
Mm-hmm.
So we bought, like I said, 38 or 39 houses, and I should have that number in that time. We bought one in San Antonio that was a great deal too, through a wholesaler, but we just got really specific and said, we're only buying this type of house in these types of areas. We bought a ton. And I realized at that time, I'd been investing in real estate for about 4 years and I'd never been really focused. But when I'd gotten really focused in any area of my life, I'd had a lot of success. So I had about a year in 2019 where I didn't buy any real estate and I just focused on selling real estate. And I sold a ton of real estate in 2019. Best year I'd ever had, made a lot of money. In 2020, when I realized that I needed to do that on my investing too, of course, we had a lot of success. So now we're just looking for mobile home parks. We're just looking in the 30 to 80 lot range currently. We're just looking for city water, sewer, or septic tanks, and we'd like to be at least 60% occupied. And there's a lot around that criteria of why we're looking for those certain things. But to my life, it's important that I'm able still to focus a lot on the brokerage business because it's a great business. And the better I do in the brokerage business, the more cash I'll have to invest on the real estate investing side too.
Yeah, for sure.
So I'm still focusing a lot on that. And how can I make my investing lend to my time being free to focus on the brokerage business and not be working 24/7 too. That's also very important to me. I just got engaged. I want to have some sort of work-life balance, especially right now. And the investing is It's a secondary business in a sense to my
Yeah.
brokerage business, but it will make me much more money in the long run.
Yeah. Yeah. Well, congrats on the engagement. That's nice
But
to hear.
thanks.
Yeah. I got to get back into this, into the transition. So you're buying a bunch of duplexes, house hacking, bought some
Mhm.
sixplexes. And then when did you transition into the RV parks and why?
I got interested in mobile home parks in 2019. And this is another thing, I didn't have the focus. So I got interested in mobile home parks in 2019. I went to Frank Rolf's MHP boot camp,
Yeah.
actually here in Austin in 2019. I learned all about it, had all the information, joined his mastermind at the time, didn't really do anything with it. Was still kind of all over the place on my investing side, and I was still doing things, so it was good. But starting in the beginning of 2023, I had been in and out of the mobile home park space, looking at things, seeing people have success. I'm in GoBundance, a mastermind. A lot of people are in here in Austin, and I joined that group when I moved back to Austin in 2020. I heard a guy speak from the stage, and he had talked about how he had grown his net worth significantly and his passive income significantly with mobile home park investing. And I'm like, man, I know this. I know all about this stuff. I've just really never put my head to it. So I decided at that point, that was the winter event of 2023. So it had to have been January. This is all I'm going to focus on. It's mobile home park investing. And that's what I'm going to do. It took until end of November 2023 until we closed on our first one. My business partner and I in Louisville had a property manager in Louisville for our single family houses. And he just kept talking about mobile home parks, this guy. His leasing agent knew people that lived in one and connected her with an owner. So oddly enough, we didn't actually find it. Our property manager found it. Now we're partnered on that mobile home park with them. And it's been amazing so far. We took the rents. They were at 250 day one. It was actually in the best school district in Kentucky. It was all tenant owned homes. So we don't own any of the mobile
Yeah.
homes. We own one house on the lot. And that's been the biggest pain point since owning it is the house.
Why is that? Just because of maintenance?
Because you have to take care of houses.
Yeah. Just wondering if that was what it
Yeah.
was or something else.
Yeah.
Yeah.
Yeah, no, absolutely. And the expense ratios are just so much higher when you own the real estate. Obviously,
When you own the structure. Yeah.
yeah, when you
Yeah.
own the real property.
Yeah.
Obviously, you can't always make out and not own anything. We lucked out on this first park and we didn't own anything except that one house. So all the tenants owned their homes. Their rents were super low. They were in a great area. We raised the rent to 400 right away, which I wasn't really interested in doing. I pushed back on that a little bit, but I was outnumbered and nobody left. So we didn't
Yeah.
lose anybody. The income went from 8,800 to 13,000, the gross income. Obviously, all other expenses stayed the same. So that property is doing great so far. And we're just on the hunt for another. We're under contract on one in San Antonio, actually.
Mm-hmm.
And I'm looking at another park in Texas with some other partners that it sounds like we're close on. And also another one in Ohio with some other partners too. So it's just a beginning for me on that side of things, but
Okay.
I needed something that could scale better. So we were buying all these houses and we made significant gains in net worth and we're starting to make good cash flow off these houses. But I figured out we were going to need hundreds of these houses to make the cash flow that we wanted. Hundreds,
Yeah.
to
When you
make the
sit down
cash
and you start looking at that and you talk like every single individual house with tenants, toilets, all the things that go into that.
Mhm.
Yeah, it is. It's a different beast. So I love the sorry, I keep calling it RV parks. I love the mobile home parks because you own the dirt and they're paying you for the dirt. And that it's also very sticky because once they put their home on that lot, it's fairly challenging for them to move that thing. And so you can increase the rents. So that it seems like there would be, like you said, you had a hard time doing that. Was it because you felt like you were increasing them more than they should have been, or just because, yeah, but people stay. And so like, what's the strategy going forward? Do you say, hey guys, we're going to raise these 5% every year or 10%, or like, is there any kind of communication with them in that sense?
Not with the tenants, with the partners, of course, we're talking about it. I think we're going to do $50 per year until we're at or above market.
Yeah.
Not going to get above market, of course.
Yeah.
But we don't want to raise rent without providing value. So we already started to do stuff like repainting or replacing the fences and putting new mailboxes in and patching all the potholes and that kind of stuff. And then just providing a better level of service.
Yeah.
The last guy that owned it, he kept the rents cheap, but the service reflected that, and it
Yeah.
always does.
Yeah.
So we're just really trying to provide a much better living experience for these people. We want to provide value for these people. I love mobile home parks, not just because they're good investments, but because a lot of these people are some of the hardest working, nicest, most genuine people you'll ever meet. We were walking, doing due diligence on this mobile home park. This guy that lived in the one of the last trailers on the last homes on the left side gave us a bunch of peppers to take home. He's just such a nice guy.
Yeah.
You know, they're hardworking people. He salts for us when there's snow in Kentucky, which is very rare, but we pay him to do the salt for us there. You know, like I've walked lots of mobile home communities with American flags everywhere and nice gardening, and it's affordable housing. But I've been in the affordable housing space my entire career. It's affordable housing where people have pride of ownership because they own the homes
Yeah.
and they take care of the homes, and they're still going to work. You know, they're the essential workers that are out there. So they're going and they're working the fast food jobs, or they're working the Walmart and that kind of stuff jobs that people just won't do anymore. And these people, this is one of the ways they can own a home. You know,
Yeah.
so I'm passionate about it for a lot of other different reasons other than just the ability to scale and the cash flow. Something people don't tell you about mobile home park investing, it's extremely challenging to find a mobile home park to purchase that makes any sense. Most of the stuff that makes it to the loop nets, to the Crexes, to the mobile home park store sites is garbage. You know, the utilities are garbage, the occupancy is garbage. It's usually something more than just the income numbers, because of course, if the market rent is 500, the rent of each lot is 250. Eventually you can get it up to market. Don't do it right away, but eventually you can. So you have to pound the pavement. You have to talk to brokers. You have to send out mailers. You have to cold call owners. The people that are successful in this business do a lot of outreach to people. It's not an efficient market at all. And that's another reason I like it, because it's really challenging.
Yeah. So let's talk about the economics of one of these deals and how you underwrite them.
Mm-hmm.
I imagine, I mean, you're looking at the gross rent and then taking expenses, you get your NOI number. Are they trading on cap rates? Yeah. So what is some cap rates that you've been looking at in San Antonio? What do you see trade and what is market?
Yeah. So that's a great question. And it's kind of all over the map.
Yeah.
So everybody wants to buy at a 10 cap. A lot of newer people will listen to old podcasts or read old material and they want to buy at a 12 cap or whatever. Probably not going to happen. I'm still seeing stuff trading in 8 to 9 cap range. I want to buy with some sort of spread on the interest rate that we're getting. So if we're getting a 7.5% interest rate, I at least want to buy at a 9 cap or an 8.5 cap with the opportunity to raise rents and increase that.
Yeah.
It's hard to look at the P&L or the trailing 12 on these things, because it's same as any real estate. You kind of have to look at it as, how am I going to run this compared to how they run it? And I think I learned that early on. I'm not quite sure how I understood that. But when I was looking at rental properties, I wasn't saying, hey, what is the owner going to do? I'd say, hey, this is a duplex in this area. Here is the regular expenses for this type of property. Here's what I'm going to budget for contingencies, and here's how I'm going to run it. And that's how I always analyze properties. I sort of do the same thing here, but you have to pay a little bit more of attention, because they say, oh, the tenants pay all the utilities. Then you see a $7,000 water bill for the year. You're like, hey, I know you said that, but where did this $7,000 water bill come from? And there's always a story. I find more that mobile home park owners, it's not that they don't, or that they're trying to pull the wool over your eyes. A lot of them just don't know. This guy we bought this mobile home park from in Kentucky, he had no profit and loss. He had no rent roll.
That's kind of what I would expect for some of these things. Just having talked to some of the owners of. Sorry,
he didn't know anything. He had the bills. He said, well, here's the bills I pay every month. So we had to build our own pro forma when we were doing due diligence. You know, we had to go through, find all his utilities, find all his expenses, and estimate what our expenses were going to be. Luckily, we had a good banker who we worked with a lot in Louisville, and he just worked with us on it.
Yeah, I would think on those types of deals, you're going to build that out on your own. You're going to kind of see what you're looking at. And you mentioned something like having a spread between the cap rate and the actual loan. So I literally was talking to somebody earlier, it's a debt broker, and we were talking about negative leverage on multifamily and how that's just a going concern right now.
Yeah.
Like it doesn't make any sense. Like
No.
that's the reason things aren't trading. This so are you seeing? You mentioned the listed properties. The ones that are listed are typically those that there's something wrong. Is not something wrong with them necessarily, but they're either overpriced or something's going on with them. And I've underwritten some of them, and they are still. I would be in a negative leverage situation. So you're getting most of your stuff, or all the ones that you're looking at now, either under contract and when you bought were pretty much off market, correct?
No, the one we're under contract on in San Antonio actually is from the MLS, believe it or not.
Oh, really? Nice.
We are under contract more than 30% below list price, and we're still probably going to need to get a discount to be able to close on this thing, learning more about it.
Yeah.
So,
Because of the
yeah.
debt, or what's causing something like that?
Well, again, I don't think that anybody misrepresented anything, but I think people misunderstood the current situation. A lot of these owners are older. They've kind of done things handshake by the seat of their pants. They think they know the numbers. They don't really know the numbers. What we were told wasn't quite what actually is. And I'm not blaming anybody for that. I don't blame the broker for that because he was telling us what he was told or what was explained to him and maybe wasn't understood. So the deals we're looking at right now are coming from wholesalers, brokers, or some of these public listing sites. But it's very rare we're making offers anywhere close to what's listed when there's a listed property.
Yeah.
So I saw one. I was looking at a property. I know the city because some of my family lives there in Illinois. I was looking at the city. It's probably worth 600. She's listed at 1.1. It's just not uncommon to see listed properties that way. And I've not heard of many people, and I've not had the experience that you're able to get properties for 50% less than the list price. The seller has come to a conclusion that the property's worth 1.1 million.
Sure. They anchored
And
themselves there, or the agent did, or something.
And with mobile home parks too, the interesting thing is when you're getting income from the homes and not just renting the lots, which a lot of these people are, because you get more from renting the homes than just the lots. The bankers won't count that most of the time because the homes aren't real property. They're personal property.
Yep.
They have a HUD seal, they can be sold, but they're not appreciating real property. So the owner might say, I'm making $20,000 a month. I don't know what you're talking about. You're like, that's great. But if you applied your lot rent that you're charging the three people that are not renters, you really only make it $10,000 to $12,000 a month. And that's the income we have to use to underwrite the property. And it's hard to come to that understanding, because then they'd be selling it actually at an 8 cap is, like I said, 600,000, or 9 cap might be 600,000, but they think a 9 cap with their income is 1.1 million because they're using their gross income number, where you have to use the gross income number of the lot rent multiplied by the number of occupied and paying lots.
Is there not a strategy? Because there's value. They are earning that income. So maybe the bank doesn't see it that way. And so for your underwriting for the bank to get the loan, your loan proceeds are going to be lower, right?
Oh, yeah.
Based on their numbers. But at the same time, that cash flow is coming in, right? It's coming in the door. So I get you could, in negotiations with the seller, probably get a discount, but is there value in somehow taking those owned mobile homes and then either owner financing them or doing something with them on the back end to where you don't have ownership of those any longer and it turns it into cash flow? Do you guys do anything like that, or have you considered that?
We haven't had to. Like I said, ours is the one we own. They're all tenant-owned homes currently.
Yeah.
So there's lots of ways to do that. Like you said, there is owner financing. There's a big question mark there of whether or not that's a viable option, because if you do more than a couple owner finance deals a year, I think you run into some sort of Safe Act compliance.
On a personal property, you're almost doing like a bill of sale on a personal loan in most spaces for those things.
Yeah, you kind of end up being a lender past a certain point, and that's
Yeah.
not something I have experience with. It's just essentially hearsay.
I,
But there are lenders and there are credit facilities out there that will do these loans, so you can get cashed out right away. So if you sell, let's say you sold a home for $10,000 to somebody and they went and got a loan with PEP is one of them. Performance Enhancement Partners, I think is what they're called. Clayton Homes has one too, 21st Mortgage,
yeah.
that they partner with. Like those people will finance these homes and pay you out right away. So that's a great way to make money off these homes. Obviously, you don't want to pay too much for them because you're not really sure what they're worth until you go sell them.
Yeah.
But Yeah, there are some value in the homes. It's just not something I don't want to own the homes because I got into mobile home parks for one reason. And one of the reasons was that I wanted to not own as much real property because we're always dealing with problems. You know, we had a Section 8 inspection today where we got a Section 8 tenant in Louisville. Section 8 inspector came through and said, all these smoke detectors are bad. You're using the wrong batteries. Are you kidding me? So now we have to pay somebody to go in and replace the smoke detectors, probably $100, not much at all. But that's something, luckily I have a good partner that he has to deal with, and he has to have somebody go do that. When you don't own the home, you don't have to deal with any of that crap. And that's a
Correct.
minor one. We had a
Mhm.
$15,000 sewer line repair last year. I had to repair the sewer line all through the house. Like, there's some of it that can't be avoided. Obviously, you still own the utilities with mobile home parks, even if you own none of the homes. Obviously, you still own the roads. There's stuff there, but the expense ratio is much lower because there's not somebody that moves in that's not paying anything to be in your house, trashes it because they don't care, and then you have to go through and do a $10,000 rehab because they just destroyed your nice new house.
Yeah. A couple questions before we cut this. But so one expense ratio you just mentioned, I'm kind of curious what that is. Cover the expense ratio real fast on these. What's typical? So give me the high level numbers. So like in multifamily right now, a lot of numbers are, or they have been 55%, right? It's like,
Mhm.
that's kind of what you're going to get to. Taxes, insurance are going up, everything, that's kind of what you're hitting
Mhm.
with the vacancy rates and everything. So what is it on mobile home parks? Typically, if I were to say, hey, I need a quick rule of thumb if I'm looking at a park and want to evaluate it in back of the napkin type thing.
So it depends a lot if you own the homes or not. And there's a huge differentiator between if you own the homes or not.
Let's assume
So
you don't. Yeah.
if you don't own the homes, I would say 30 to 35%. Again, it depends who pays the utilities. It depends how those utilities are billed to the residents.
Okay.
So if they're direct billed from a local municipality, like let's say San Antonio runs the sewer lines in your mobile home park and they bill the residents directly, that's amazing.
Yeah.
It's also hard to find. But let's say you are billing the residents and you're able to recapture most of it. You might use a 30 to 35% expense ratio. We're lucky. We have figured a 30% expense ratio. We have a city water, city sewer, and we have septic tanks on some of the mobile homes where we are. We were able to recapture almost all of the water expense.
Yeah.
So we do direct bill them. The city does not bill them, so we bill them. But we use a RUBS type system.
Yeah.
We're able to capture almost everything.
You 80, 90, 95%.
Of the water, I'd say 90% of the
Yeah.
water,
Solid.
95% of the water. Yeah. Yeah, because we just charge in like a RUBS fashion and we
Hmm.
charge per house in a RUBS fashion. So somebody might pay 15, some house might pay 45.
Yeah.
It
Yeah.
just depends how many people are in it.
Yeah.
But yeah, I would say 30 to 40% is kind of the industry standard. But that's a lot going to depend on how many homes do you own, how old are the homes, what's the source of the utilities, and who bills it.
Yeah. That makes
Um,
sense. Okay. I figured out what I was going to ask you. It was about the homes. How do you get them? So you own this mobile home park, you have 3 vacant lots, or you have expanded and somehow you now have access to 3 pads.
mhm.
What's the process of somebody getting in there? Like, how are you marketing to those people? Are you putting a home in there and then, yeah, like, what's the easiest way? Very curious
Yeah,
about that.
so again, I've not had to do it, but I've learned a lot about it because I know we're going to have to do it.
Yeah.
So I would say, depending on where you are, here in Texas, Texas is a very friendly state to mobile home parks. There's a great mobile home park association. They're very active. They're nice guys. They speak at a lot of events. They're advocating on our behalf with the Texas government. Here it's pretty easy. They don't require wild setups. In a lot of state, they will require a certain size concrete pad. They will require, let's say, 200 amp electrical hookups. They'll require a certain type of sewer hookup. Texas is again fairly easy. Obviously, it needs to be a sewer hookup, it needs to be an electrical hookup, needs to in Texas, like a gravel pad is
Yeah.
will go. I'm to my best understanding, it'll just be gravel, cheap. So you can go out and buy a used or new mobile home, bring it in and sell it to somebody.
Got it.
Obviously, the setup cost, you have to get it moved in, you have to get it set up, you have to get it secured, maybe $5,000 to $10,000. The mobile homes, it's as cheap as you can get it. The
Yeah.
new ones are somewhere in the $40,000 to $80,000 range right now. Depends what it is. The double wides get up into the low hundreds, but they're nice. We went to a mobile home show in Louisville. I went to Louisville for this and to check on our park. And some of the double wides, you would love to have it out on some land,
Yeah.
maybe have a cabin out somewhere by the lake or by whatever, just out in the country. Really nice homes. You would never be able to tell it's a mobile home.
Yeah.
But yeah, I mean, we'll call it 10 to 90,000 to put a single wide home into a park. And you're selling that to somebody that needs an affordable place to live and wants a nice home.
Oh, man. Okay. So that's the best strategy. Like, I guess what I was driving at, there's not a lot of owners who already own a home that are moving them around, like picking up and moving it. And they're like, oh, I don't like this park anymore. I'm going to move to another one.
It's expensive.
I know. It's like,
there are people that do that. You can sometimes pay to move other people's homes into your park, but it's not cheap. I mean, let's say $8,000 to $10,000 to move a home, depending on how far. If you live in a mobile home, you're probably not rolling in it. I'm trying not to put any stereotypes on anybody, but it's just not cheap to move these homes.
Yeah.
So no, I've not heard of a lot of that. I don't see a lot of that. You talk to owners that say, oh, I've got a waiting list. There's all these RVs looking to come in. There's all these mobile homes looking to come in. When you ask them to produce it, if you called that waiting list, 95% of them probably wouldn't be interested anymore.
Yeah.
But there are credit facilities that will help finance this stuff. I have a buddy that started a fund here in Austin to help facilitate putting homes in lots. So just call it $10,000 to get a home installed and set up. He has his fund that lends some money for that. And then he has one of these bigger, like Clayton Homes, Century 21 mortgage, bring the home in. He has a certain amount of time to sell the home. And then when he sells the home, he pays back his fund. He pays back, Century takes over the mortgage, or 21st Mortgage takes over the mortgage for the tenant, and it's done. So
yeah, I need to maybe talk to him about that. It's a very similar strategy as what we're doing on a fund. We launch a crowd fund to buy single family, owner finance them. And the whole idea is to keep them in the fund, but there's probably takeout. I imagine there's some takeout.
I have an awesome podcast episode. I have the Austin Real Estate Investing podcast. If you look up Samuel Madrid, he did a ton of those in San Antonio.
Yeah.
He's crushing it with that. I heard that and I said, I messed up, man. I should have
He's,
been doing what you were doing.
Him and God, there were two of those guys. When I first started investing, it was 2009 or something in San Antonio. And Mitch Stevens, I don't know if you know him, but he's another guy. Him and Sam are like good buddies, or used to be. And they were just going around buying everything, owner financing everything. I think the last numbers I heard, he was in the hundreds of thousands of dollars in cash flow on a
like over 500 homes. It's nuts.
Yeah.
I mean, that's the thing, man. And you pay attention to people long enough, you realize there's a lot of people out there on social media just doing everything. And then you realize there's a lot of these guys that are just keep to themselves and do the same thing over and over and are extremely successful by doing it. And that's what I realized is I'm going to run a team that sells a lot of houses, and I'm going to focus on buying real estate, whatever I'm focusing on at that time. It's mobile home parks right now. I don't think that's going to change anytime soon, but if an opportunity popped up where we could buy a lot of houses again and they made a lot of sense, that's a great way to build equity. And we will redeploy that equity later at some point in time into better cash flow.
Yeah, that's awesome. Well, hey, Jordan, man, it's been awesome catching up. We are a short drive away. We should probably catch up sometime. I don't know if you get into any kind of sports or anything. Playing pickleball these days, sound like your personal trainer. I don't know. What do you do for kicks?
No, I'm training for a sprint triathlon right now. I go to the gym about every day. A lot of times it's outdoor stuff, so I'll run or we'll hike on the weekends, that kind of stuff around Austin here.
Yeah.
I mean, anything active that I can do. I enjoy being active. I enjoy working out, being outside. I started working as a personal trainer when I was in college, dropped out of college to do that, did that for a couple years. And I would go to the gym probably 3 times a week when I was a trainer. I haven't trained anybody since 2017, and now I go 7 times a week.
Yeah.
So it's interesting. You get interested in something and you think, oh, I should work in this because I like this. And I don't think that's always the case. I'm glad I did that. It was great to build work ethic and build business understanding, but I just really love being active, and I do a lot more of it now.
Yeah, for sure, man. Yeah, I play a lot of pickleball, and I think about there's some guys like launching pickleball businesses and actually turning some real estate into pickleball. And actually, a buddy of mine told me to come down and look at his warehouse. He's like, "Can we put pickleball here?" And the same thing crossed my mind. I'm like, "Is this thing that I enjoy going to turn into a job? Then I lose the enjoyment for the thing." So, but hey, man, again, good catching up. I appreciate you sharing your information. I'm going to put your contact information in the show notes. If you're looking for real estate in the Austin market and Jordan can help you out, definitely reach out to him and his team. I'm sure they can help you in various needs. If you're interested in mobile home park investing as well, I'm sure he's going to have a fund set up pretty soon. You can invest in. I don't know how you guys are doing your deals or not, but yeah, just keep them in mind. So we didn't touch on how you guys are actually buying those deals, but maybe we can talk about that another time as well, man.
Absolutely. Yeah, absolutely. Would love to talk to anybody. Right now, it's just us buying them, partners buying them, but that can only go so far. So I'm sure we'll have opportunities here in the future.
Yeah. Hey, man, thanks again.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.